Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, June 8th. Firstly to the S&P 500, and here we see a continuation of the trend to the downside today, and the sellers coming back into this market very strongly. Now this follows the spinning top type candle that formed at the end of last week, and that candle also continued the trend to the downside, and that followed the bearish breakout down below the Kijun-sen indicator and the round number 2100. We did see the 2093 level and the top of the Ichimoku cloud holding as strong support for this market, but today the sellers have been extremely strong. They've taken out the bottom of the Ichimoku cloud, and with the sellers in control and strongly committed to this move, there is an opportunity here for the market to continue to trade lower. Now, a few things to be aware of. Very often we can see false breakouts from a flat part of the Ichimoku cloud. So with this breakout being very bearish, it does suggest that the sellers may have found some momentum to continue this trend to the downside. But what we want to see here to confirm this breakout and this negative bias in the longer term time frame will be some strong follow through to the downside. So we want to see another, at least one or even more strong bearish candles if we are going to see this market continue trading with a strong bearish bias in the longer term time frame. The problem here for the sellers is going to be the strong support down through to the 2040 area, and this highlighted area has been an area that's been in play for quite some time as previous strong resistance and strong support, and we see a couple of levels on the way down through to the 2040 level, firstly at 2067, then down to around 2047, and all through this region we've seen buying coming in the recent past. So there is an opportunity here for the buyers if they're strong enough. With this candle being a strong bearish candle, we're not likely to see a change of trend to the upside immediately. We do have very strong resistance now around the top of the Ichimoku cloud at 2093, and then at the bottom of the cloud around 2082. Next, moving to the Dow 30, and a slightly different looking chart here. We had a more bearish candle for the previous day's trading at the end of last week. Even though it has a smaller body, it suggested that the amount of net momentum to the downside was not as strong as it was previously, and suggested a possibility of change of trend to the upside. But today we've seen strong follow through, and if we look at this highlighted yellow zone, the Dow 30 index is all the much more through that highlighted zone and trading down through halfway through it, and it suggests that this market may be slightly weaker in negative terms. The sellers are probably stronger here when compared to the S&P 500. Now there is a possibility of strong support coming into the 17,735 level. It's an area that has seen strong buying coming in the recent past, so we will be watching that carefully. And this region extends down through to the bottom of the zone, about 17,686, even down through to the 17,603 area. Moving next to the Nasdaq 100, and a very similar type of candle as we've seen with the other indices. Very large black body candle, strong downside momentum from the sellers in control, some good solid commitment. This is a slightly different chart here. We've only just broken out down below the Kijun-sen today, and the bearish breakout suggests there is a possibility of the market continuing the downtrend, but we haven't seen the market for the Nasdaq 100 break out down below the Ichimoku cloud yet, and we've seen some minor amount of price rejection from this level at 44.21. That's a previous important level, and it coincides with the bottom of the Ichimoku cloud. It also coincides with the bottom of this highlighted yellow zone, not as large a zone as we saw with the other indices, but very important trading activity coming up here over the next day around this 44.21 level. And I suggest a solid bearish close down below here, and then strong bearish follow through could then see the Nasdaq 100 testing down through to about the 43.79 level, or even then potentially down to the 43.47 area eventually. Moving next to look at some of the ETFs and comparing them to the SPY ETF, which is the S&P 500 ETF. So basically comparing various markets that represent the asset classes throughout the world to the US equity index. And if we look here closely with the Vanguard FTSE All World Index, and this is without the US index added, and we see that we have trading down below the Ichimoku cloud and below each of the Ichimoku indicators, suggesting a strong bearish bias in this market. Not as strong a candle for the last couple of days, very small body candles, white body candles, so the selling hasn't been as strong. But if we look at the relative strength compared to the S&P 500 ETF, we see that we're strongly underperforming the S&P 500. So still not a time to be allocating away from the US equities market into the into a global equities market. The next ETF to look at is Ifgl. It's the Ishares global real estate market without the US REIT index included, and we see strong performance down below each of the Ichimoku indicators as expected. The Chica span is supporting this negativity, and the strong underperformance against the US equities market here. So still we don't want to be allocating away from the US equities market at the moment until we have clear signs that some of these other markets are going to start trending up. Now just looking quickly at the iShares Barclays 1 to 3 year Treasury bond fund ETF, and we see some buying coming in, so something of an allocation to the bond funds in the very short term time frame. Now this is very short term, but what we have here is a market that's still trading down below each of the Ichimoku indicators. But if we look at the performance relative to the S&P 500, starting to outperform and strongly outperform, and we see this ETF moving up in terms of volatility off a cyclical low. So there is an opportunity for this uptrend to extend itself into the Ichimoku cloud, but potentially strong resistance at the bottom of the Ichimoku cloud around the $85 level at 84.74. If we do trade higher, potential resistance up to the Kijun-sen indicator about the 84.77 region. Next to GLD, which is the Gold Trust ETF, and here we see activity down below the Ichimoku cloud, a couple of white body candles, so some buying coming in, a change of trend to the upside in the short term time frame, but still a negative market in all three time frames. The buyers in control in this candle, and the possibility of a rally here, but potentially strong resistance around the bottom of the Ichimoku cloud about the 113.70 level. Looking at the performance against the S&P 500 equities market here, and really no outperformance yet. So what we want to see is this market rally, and for it to trade up above the upper band here to highlight any potential strong outperformance, but we're not seeing that at the moment. And moving to TLT, which is the iShares Barclays 20 plus year Treasury bond fund, and a bearish candle here. Certainly not as strong as we saw with the lesser maturity bonds and or fixed interest rate assets, and we see a market that's also bearish in all three timeframes, trading below each of the Ichimoku indicators, supported by the Chica span here, and it has been strongly underperforming the equities market in the recent past, but quite neutral to the equities market at the moment, and no strong outperformance yet. We see a black body candle here, sellers in control, and some strong support down around the 117.27 level, and that's going to be an important area for TLT moving forward. Now, the important ETF to look at here is the iShares Russell 2000 Growth Index Fund, and here we see an ETF that's trending up in all three timeframes. Very strong price action for some time, continuing to trade up above the Ichimoku cloud. Previously we had a bullish candle, today an indecisive spinning top type candle, so we could see some selling coming in, but importantly this ETF is trading up above each of the Ichimoku indicators, and it still is at the moment confirmed by the Chica span being above the corresponding price action. A problem here for the buyers, however, is the strong potential resistance extending up to these swing highs around the 155.62 level. So an opportunity is here for the buyers to continue this trend to the upside. If we look at the relative performance against the SPY ETF, the S&P 500, which represents a broader market, and what we're looking here are more small cap, the small cap stocks in the US equities market, and we're seeing strong outperformance of this index against the broader and larger cap index. So what we've seen here, instead of an allocation into other asset classes and into strongly into the bond market or into gold or whatever, what we've seen here is an allocation away from the larger capitalized stocks into the lower capitalized stocks. And we also see this in the IWC ETF, which is the Ishares Russell Micro Cap Index Fund, and very strong trading up above each of the Ichimoku indicators, and the very strong outperformance against the broader and larger cap S&P 500 index.